The data in the United States drops now, and it's a beat, and it has a 3 handle. US GDP for the third quarter comes in at 3 full percentage points. The previous quarter, 3.1, the estimate 2.6. So the print is 3%. The estimate was 2.6, the previous number 3.1. Personal consumption comes in at 2.4%. That is an upside surprise as well. The estimate was 2.1%. The previous number was 3.3. So US GDP this quarter was expected to slow from the previous one, but slow a whole lot more than it has done. We've dropped from 3.1 to 3% for the third quarter of US GDP. It's an initial read on things and it could change, but it's a strong one at that. In the FX market, this is what it means. It means a stronger dollar story, a 95 handle on the dollar index. We reclaim that and stay there and push higher. We're up by 0.5%. If you can check out a bond market for us very quickly, over the last couple of weeks, yields have been pushing higher, higher, higher. We're back higher by about a basis point now after being lower by a basis point going into the numbers. So it's about a 2 basis point move, and we're back at 247 on a US 10-year. For futures, about an hour away from the open, they stay positive and they stay strong. We're up about 0.2% on the S&P 500. To discuss the numbers then, and they're looking solid from Princeton. Ira Jersey, Chief US Rate Strategist for Bloomberg Intelligence. Still with us, Jim Paulson of the Luthold Group, and back with us around the table, Michael McKee, Bloomberg's International Economic and Policy Correspondent. It's GDP, and once again, it has a 3 in front of it.
And it would be higher if not for hurricanes. It looks like this played out exactly as economists expected, with consumer spending dropping a little bit, primarily for services, because utilities, things like that, interrupted. People were not able to go out to restaurants, etc. So you have that problem. Non-residential structure investment falls 5.2%. A lot of damage to buildings and a lot of shutdowns of the oil industry during that period. So that plays out as expected. And government consumption down 1/10, although the federal government made up a lot of that with a drop. That spending should come back. Inventory is higher than we thought, and we did see that reflected in the monthly numbers. Dealer lots cleared out for cars, for example, so the wholesalers bringing in more. And net exports, interesting number here, is a little bit lower than we thought it was, so more of a contribution from trade than we had expected. But a number like this, while it's just the first print, and it is likely to change significantly over the next 2 months, but it does set us up well for the next quarter.